Traders brace for political volatility just 5 months from Election Day. Welcome to Market Insight. I'm Elena Casas. Donald Trump last week became the first former president convicted of a felony, but both pollsters and Wall Street still see him with a solid chance of winning the November election. Last week's verdict does not affect his ability to run, and investors are starting to price in what his mix of promised tariffs and tax cuts could mean for the stock market. Joining me now to talk about all that is Fairbanks, portfolio manager at Impax. Amber, what could a Trump second term mean for the market?
At this point, I think it's pretty challenging to understand that. I think the market's really still focused on inflation, and I don't know that anything Trump does or even anything Biden does could really impact that. So it really becomes the visibility on economic growth and inflation and interest rates, more so than what's going to happen over the next 4 years with regards to the president.
You specialise, though, in ESG investing, where, of course, companies have seen a boost in the last couple of years from public investment, notably through the Inflation Reduction Act. How much of that could a Trump administration potentially reverse?
It's been really interesting to see the politicalization of ESG. But at the end of the day, understanding factors that have an impact on the value of companies isn't ESG investing. It's just investing. And if you're thinking of an owner of a company, you really want to think through risks and opportunities over the longer term. So I think it's been very politicized, and there might be some uncertainty around regulations. But at the end of the day, to the extent ESG adds value to the investment process, we just see it as a good way to invest, period. So I don't think that any sort of president regulation could have a significant impact on that to the extent it's really adding value over the long term.
You mentioned, though, that markets remain laser-focused on inflation. Trump's plans, of course, involve steeper tariffs on Chinese goods in particular, and also tax cuts. Is it possible political change could push up inflation again?
It's entirely possible. I think that we've seen very, very sticky inflation despite where interest rates are and the record rise that we saw in interest rates. So it's a little bit challenging to understand exactly why it's been so sticky. But to the extent we have tax cuts, to the extent we have diminished supply from China, all of that can very easily push up inflation.
You mentioned that inflation has still been very sticky. Recent data has shown some weakening in the US economy. The JOLTS number that just came out today was sharply down, for example. What do you make of the macro picture?
I think we're starting to see some softening on inflation, and that's a very positive thing for the market, at least in the short term. But again, it comes down to, can the Fed manufacture a soft landing? Can we still have economic growth in the light of the high interest rates that we've seen in moderating inflation? So that still becomes a question mark, in my opinion. But for now, at least, the moderating inflation is a very positive sign for the market.
Given that uncertainty, though, and of course the upcoming election, do you think it's a time for more defensive positioning for investors?
I mean, I think you have to use valuation as your starting point. A lot of these stocks have done incredibly well around AI, for example. The meme stocks are another area. I think valuation at some point becomes important. It's been very challenging to be an investor that's focused on valuation. It just doesn't matter at this point. It's kind of the story stocks that are doing really well. But I do think from a defensive positioning standpoint, those are the stocks that have kind of been left for dead in this market environment. And I think there's some great valuation opportunities there.
Amber Fairbanks of Impax, thank you so much for joining us. Well, that's your Market Insight. You can watch more videos on Reuters.com.